Hello Internet, this is Marko Yamashita. I'm making this video in between my release schedule of published videos I want to put out because I feel some vitally important information needs to be delivered to you, whether you're a casual fan or a stock watcher or stockholder, and it's important for you to hear this now before it happens. I will be including a few graphical images along the way to hopefully convey to you what I want you to know. Both Cover Corporation and Anycolor Inc. will be hosting their annual shareholder meetings over the next few weeks. While this is not terribly impactful, we may see a market reaction if any information is shared that hasn't already been shared or included in any of the last reports. More importantly, the broader market will be heading into the least favorable trading months starting at the tail end of June and stretching all the way through September. If you look at the trading patterns of Anycolor and Cover Corporation, both of them perform extremely poor during these months, and that's what a cyclical stock does. There are many considerations as to why their performance ends up being that poor during those months, but most, if not all, are considerations from the economy related specific to either the US market or the Japanese market. In many cases, it's also due to profit taking from investors who pull out their earnings and interest and put them into other companies, because this is a seasonal change where they do a rotation of their funds into different business sectors. But more importantly, both the United States and central banks of Japan have been withholding the urge to tinker with their interest rates, but both of them are also receiving pressure for them to implement changes at least once before the end of 2025. Added to this consideration, there are continued trade tensions, and then there's conflicts around the world and a continued struggle with inflation. And with the global economy's influence on the individual market, it weighs heavily on companies that rely on specific economic factors of the market they're part of. And realistically, both companies have probably reached a certain ceiling. Whether or not they're able to innovate beyond that current ceiling depends on the leadership of each company. Now, in my opinion, Q1 for both companies will likely look meager, and history reflects that. Many, they'll try to capitalize on it and say, hey, look how badly they've fallen. Oh, look, they're reaching a cliff and it's all over for them and stuff like that. This is what's called a market cycle. It always happens. Practically every critic out there has used this specific slide in their commentary, which means that they have either been ignorant of the facts or willing to deceive their audience despite the facts being in front of them. In either case, does it really make sense to believe anything they say if that is the narrative they're selling you? July through September could be those months where more ambitious people see opportunity, while drama and newstubers push the fear-mongering and moralistic agendas that they have.
Water is wet. This is something that's kind of obvious. This is a post on the Nijisanji subreddit posted by Significant Art. It says, "There is no way that they'll recover from this, will they?"
Since I've been investing, I've seen over 90% returns on my personal portfolio by taking advantage of these entry points and exit points. And that's not a flex. It's just the truth. Tell me something, does it really matter if some Redditor out there mocks you for investing in Anycolor or Cover Corporation? No. Because you're getting paid and they're not. You're supporting the industry. He probably goes to bed with a full body pillow lusting over his Oshi. We here on my channel are about the business and support of the VTuber industry, and The money we make off of these companies support myself, my channel, and are going to go to other small VTubers. If you are looking to invest in either brand, research and study the companies. Know the tendencies, know the business models, and know the plans that they have for this coming year and the midterm growth. If you're just trying to track the companies, these cyclical patterns will likely jump out at you over the next few months. But most importantly, know the difference between the fear-mongering and reality. These people live quarter to quarter and never look at the long term. They manipulate data, charts, and information to present failure to you, the viewer. As of June 21st, 2025, IndyCar stock has risen 111.23% since going public. Cover has grown by 30.80%. But if you slide the chart slightly, you can see how you can use any point on the graph to make it look like they have lost value instead. I won't pretend to know the future. I'm not a pro at this. I'm not professional, I am not certified or anything like that. However, when I look at the forecast for both companies, I'm anticipating paying for Q1. IndyCar is promising twice what they made the previous year. Cover, with their ballooning operational and development costs, expects to bring in $3 billion more than last year. Since short selling and margin buyers and traders are likely going to be occurring en masse on Q1, both companies could see their price skyrocket should they meet the forecast, and then they could also jump off a cliff because of a short squeeze. So my advice to you, dear viewer, keep your guard up, expect turbulent prices through October, and don't buy into the doom and gloom. Diligence and your own homework if you want to buy in the market. Most of these people haven't a clue what they're talking about, so they fake it till they make it. Then you have people like me who try to keep you as informed as possible. So for you, happy investing if you're an investor, or if you're simply following the news. I hope this information has been informative. Until next time, this is Marko Yamashita signing off. Peace.